Hey there, traders and trader friends. We are back with a new Shortcast, always here to help you. My name is Tim, and thanks for tuning in. Like and subscribe for more trading content. Enjoy.
Big one today, folks. We're talking about something that's, well, let's face it, it's got to be top of mind for anyone who's even thought about dipping their toes into the trading world, right? Protecting your money. And we're going deep on this idea, this phrase that really caught our eye. Trading to live another day.
Yeah, I like that. It sounds kind of obvious when you first hear it, right? But you start to unpack it, and man, it really gets to the core of what it takes to, not just survive, but actually thrive as a trader.
Exactly. And that's what we're digging into today. So trading to live another day, I mean, it kind of sounds like you're playing it safe, right? Shouldn't the goal be to make it big, make it fast?
That's the sexy idea that sucks everyone in. And hey, I get it. Who doesn't love a good win, right? But the thing about trading, and this is what trips most people up, it's not about those one-off wins. It's about consistency. It's about staying in the game long enough to actually see those wins.
So you're saying it's more of a marathon, not a sprint?
100%. And this idea, this trading to live another day, it really highlights the importance of what we call capital preservation. Think of it like your base camp. It's the foundation of everything. You blow your capital early on, chasing some unrealistic gains. Well, even if you do hit a home run later, you're starting from scratch. You've lost so much time, so much potential.
Right. That makes a ton of sense. So, okay, let's get practical. Yeah. How do we actually put this into practice? How do we protect our capital?
All right, so this is where risk management comes in. This is your game plan, your defense strategy, and the first rule of risk management, it's deceptively simple. Know your limits.
Okay, I think I see where you're going with this. You're talking about setting boundaries, right? Like, how much are you actually willing to lose on any given trade?
You got it. And I'm not talking about some vague idea in your head. You need a hard number, something concrete. This is where tools like stop-loss orders can be lifesavers.
Stop-loss orders, right?
Mm-hmm.
So for our listeners who might be new to this, can you break that down a bit?
Sure. So a stop-loss order, it's basically an instruction you give to your broker. You're saying, if the price of this asset drops to this specific level, sell my shares, get me out, limit my losses.
Like an automatic safety net.
Exactly. It takes the emotion out of the equation. Because trust me, when you see your hard-earned money disappearing, it can be tough to hit that sell button. Emotions can really mess with your decision-making.
No doubt about it. Emotions and trading, that's a whole other deep dive right there. But just to be sure I'm following you, there are different kinds of stop-loss orders, right? It's not a one-size-fits-all kind of thing.
Absolutely not. You've got your trailing stop-loss orders, which adjust as the price moves in your favor. You've got time-based stop-loss orders, which might be useful for event-driven trading. The type of stop-loss order that's right for you, well, it depends on your individual trading style, your risk tolerance, the asset you're trading, a whole bunch of factors. But the key takeaway here is that stop-loss orders are a crucial tool for anyone serious about protecting their capital.
Makes sense. So we've got our limits in place. We've got our safety nets set up. What else can we do to manage risk? I feel like we've got to talk about diversification, right?
Bingo! You don't want to put all your eggs in one basket, right? Diversification is all about spreading your risk across different asset classes. Stocks, bonds, real estate, commodities, even things like crypto, if you're feeling adventurous.
So it's kind of like building a well-balanced breakfast for your portfolio. You want a little bit of this, a little bit of that, to make sure you're covered no matter what the market throws your way.
That's a great analogy. And the reason diversification is so powerful is because it helps you weather those inevitable market storms. Because let's be real, not every investment is going to be a winner. And when one sector takes a hit, you don't want your entire portfolio going down with it. So true. So to wrap things up, and I know I've learned a ton here today, it seems like the real key takeaway from this idea of trading to live another day, it's not about shying away from the market. It's about approaching it with a strategy, with a plan, and with the understanding that protecting your capital is priority number one.
Couldn't have said it better myself. It's about making smart, calculated decisions, not letting your emotions get the best of you, and always managing your risk.
And on that note, folks, here's something to chew on as you navigate your own trading journeys. What does trading to live another day actually look like for you? Think about your risk tolerance, your financial goals, your individual trading strategies. And remember, it's not about getting rich quick. It's about making your money work for you over the long haul.